guys, welcome back to a brand new video. I'm RexFinance, aka the CleanSpark kid, who was buying shares of CleanSpark over a year ago around the $4 price range. Just for reference, the first video that I posted on this company was posted on July 27th of 2020. And man, just look at that baby face. All I can say is wow. But that's not the point. The point is this: if you go to CleanSpark stock chart, you can fact check me and see that CleanSpark share price was in that $4 to $5 price range where I was originally buying shares of this company. So it's safe to say if you've been around on this channel for quite some time now, you've made significant return on your investment in CleanSpark if you chose to follow along on this journey. But better yet, despite all of those gains that have already come, I strongly believe that there are even more profits to look forward to as investors in this company. I typically don't make back-to-back videos on the same stock, but how could I not after a 12% day for CleanSpark? Now this 12% is exactly what shareholders of CleanSpark have been waiting for. CleanSpark has been disrespected and misunderstood as a company for quite some time now. We've been waiting for a day like this to happen. But in today's video, I'm going to be discussing whether I believe this is just the start of the market starting to respect and understand the company, or if this is just a one-off and the share price is going to fall way back down. Even after a 12% day like today, you can make a very strong argument that the market cap is still disrespecting this company mightily. My prediction over the long term is that CleanSpark will be the hot mining stock to own in most retail investors' portfolios. The reason for this is the underlying business segment of CleanSparks that the average investor isn't even aware of. I'll get into all that in today's video. But first, I want to start with the numbers. I know a lot of you that watch my videos really appreciate when I bring the spreadsheet out because you can start to visualize what I'm thinking personally instead of just hearing what I have to say. We can actually put numbers on a spreadsheet for you to look at and decide whether I'm crazy or whether you agree with me. Alright, first I want to start with a revenue multiple valuation. Using a revenue multiple is a pretty lazy way to value a company, but it's just so simple. So if you don't think your brain can process the more complex valuation methods, using the revenue multiple is much better than doing no valuation model at all. So let's go ahead and start with this. We know that the company by the end of the year is going to be mining around 18 Bitcoins per day. We know this because of the press releases that the company has put out, and we also know this based on the fact that throughout all of 2022, CleanSpark is going to be deploying more and more miners, keeping their hash rate propped up. I think 18 Bitcoin mined per day is a fair judgment right now based on the numbers they've given us. So first of all, let's just start out with the current price of Bitcoin, which right now is right around $45,000 per Bitcoin. So at $45,000 per Bitcoin and 18 Bitcoin mined per day, that gives you revenue of roughly $295 million in Bitcoin mining revenue. However, what separates CleanSpark from the rest of the Bitcoin mining companies is their underlying business segment, which is focused on energy and deploying microgrids and renewables on residences for Walmart, the US Marines, the US government, etc. CleanSpark also just informed the public about their partnership with CoinMint, which is the world's largest digital currency data center. That's incredible. CleanSpark is going to be deploying a microgrid and renewables on that data center, helping CoinMint reach 100% carbon-free energy sources. That is huge with the pressures that are on the Bitcoin mining industry currently. But anyways, according to my own judgment, I believe that the energy business segment of CleanSparks is going to do around $50 million in revenue. That number's a little bit more up in the air because we don't have all of the hard information like we do with Bitcoin. But I think $50 million is pretty conservative, and I think they can achieve that. So let's tack on that $50 million to the $295 million of Bitcoin mining revenue, and we get over $340 million in revenue for CleanSpark in the year 2022, which represents incredible revenue growth year over year. From here, what you do to get a share price with this valuation method is you tack on the revenue multiple. You multiply the total amount of revenue times your revenue multiple. A 10 revenue multiple is very conservative for the Bitcoin mining and the green energy industry. Riot and Marathon typically trade at over a 20 revenue multiple. So even if we cut that number in half to a 10 revenue multiple for CleanSpark, we can see that we get a share price of $103. And that's with Bitcoin at $45,000 per Bitcoin. Obviously, if you adjust the revenue multiple, that share price is going to go up significantly. So let's go ahead and adjust this revenue multiple to something that we more typically see in the Bitcoin mining industry at around 20. All of a sudden, it's telling us that our share price would be over $200 per share. Again, I want to review that this is a very lazy way to make a valuation on a company. but it's somewhere to start if you've never done valuations before. Also, what this doesn't take into consideration is the potential for future dilution. Most growing companies will dilute shareholders over time in order to grow their business. The goal of any management team, however, is to offset any dilution or negative impact to shareholders by using the cash raised by diluting those shareholders for accretive growth, meaning that the growth that the company sees as a result of diluting shareholders adds more value to each share than the dilution takes away from each share. So what I'm going to do is leave this revenue multiple at 20 and adjust the outstanding share count to 50 million. Let's say CleanSpark adds an additional 16 million shares to the outstanding share count. That drops the implied share price down to about $140, which is still well over that $100 price target that I have for CleanSpark by the end of the year. But it did drop it pretty significantly. So it's something to keep an eye on, how much the company dilutes shareholders. But now there's one thing that we haven't adjusted yet. We haven't adjusted the price per Bitcoin, which could very well rise significantly by the end of the year. Let's say instead of $45,000 per Bitcoin on average throughout 2022, the average price of Bitcoin is something like $75,000. All of a sudden, if we change the price of Bitcoin to $75,000, the implied share price goes back up over $200 per share. Now let's go ahead and say that instead of $75,000 per Bitcoin, it goes to $100,000 per Bitcoin. By the way, I have never backed off my belief that Bitcoin could very well hit $100,000 by the end of the year. Let's go ahead and change the $75,000 to $100,000. And that brings the implied share price to $285 per share. So you can start to see where I get my $100 price target by the end of the year, which could be pretty dang conservative. This company, keep in mind, is also debt-free. All right, so now if you want to take it one step further, we can use a different valuation metric. It's still pretty simple what we're going to do here, but I would argue it's probably a bit more accurate. What we're doing this time is using an earnings multiple. So we're taking the profits of the company and putting a multiple on that instead of just putting a multiple on the revenue. The good news for CleanSpark is that they're going to have anywhere between 60 to 80% margins on their revenue, meaning that 60 to 80% of their top line revenue will become net income for the company. That is incredible margin, and not many companies can match that. So let's go ahead and get started with this. This chart that I'm highlighting on the left here is pretty simple. What we're doing is taking the price of Bitcoin times the 18 Bitcoin mined per day times 365 days out of the year to get our estimated Bitcoin mining revenue for 2022. What we then do is we tack on the additional $50 million in energy revenue that I think the company is going to do, and then we put that earnings multiple on it. An earnings multiple of 10 is still pretty conservative, but I can still prove my point using a conservative valuation metric here. I went on the low end of that margin and said that the company is going to bring 60% of their top line revenues to the bottom line to become profits. You can see that in the formula here. If you guys don't want to make your own spreadsheet, you can join the paid monthly membership, which gives you access to this spreadsheet. Hit the join button down below if that interests you, or if you don't see the join button, hit the Patreon link down in a pinned comment below. I'd love to see some of you guys join the community. Anyways, let's keep moving on. It's pretty simple what I did here, and I've kind of explained what I've done. So let's see what our implied share prices are. At $45,000 per Bitcoin, the implied share price using the earnings multiple is about $40. At $75,000 per Bitcoin, we get an implied share price of $65, and at $100,000 per Bitcoin, we get an implied share price of $84. Again, a 10 earnings multiple is extremely conservative. So let's go ahead and double this just like we did with the revenue multiple. If we double this to 20, and that's still pretty dang conservative, we can see that the implied share price has shot up tremendously. Now we're seeing that $45,000 per Bitcoin is implying a share price of about $80 per share. $75,000 per Bitcoin is implying $130 per share, and $100,000 per Bitcoin is implying around $170 per share. So you can see why I am so excited about this opportunity going forward as long as the price of Bitcoin cooperates. So no, I am not backing off my $100 price target by the end of the year for CleanSpark. I know a lot of people think I'm crazy. They thought I was crazy when I originally came out with that price target. They still think I'm crazy now. But it was the same exact thing last year when I put a $30 price target on the stock by the end of 2020. Nobody thought that was going to happen, but guess what? It happened, and I looked like a genius. To be fair, it's not often that I look like a genius, so it felt really good. All right, so now I want to end this video with a bit of investor psychology. If you guys followed along with my journey on this channel, you will know that I believe psychology has a lot to do with your performance in the stock market. The stock market is a rigged game. Big money ultimately dictates price levels most often. The way funds and institutions make their money is by ripping off the retail investor and manipulating the retail investor's emotions. This is why you will outperform the market significantly if you stumble across a misunderstood and disrespected stock and company. If you beat Wall Street to those stocks and companies, you are going to outperform the markets tremendously. However, there is one catch. Oftentimes, it is painful while you're waiting for Wall Street to begin to understand and respect the companies. Think about Tesla. For years, investors in Tesla didn't make any money. I would even argue lots of them lost money over those years. But in 2020 and so far in 2021, those investors that were in early on Tesla have beat the markets tremendously, like not even close. It's also true as a retail investor, if you can successfully separate yourself emotionally from your stocks, you're gonna do much, much better. Because again, this is just a rigged game. Big money makes money off of manipulating retail investors in the way they're feeling about the stocks they own. They get you to panic and sell your shares to them for very, very cheap, and then they get you to FOMO in once they send the stock prices higher. They manipulate retail investors. It's a rigged game, it's a shame, but that's the way it works. So I am not just talking about emotionally separating yourself from the lows, I'm talking about emotionally separating yourself from the highs. Because if you are numb to a 12% day like today, chances are if your stock is underperforming, you're gonna be numb to that as well. With that, I hope you guys enjoyed this video. Leave a like down below if you did. If you guys are new here or returning and not yet subscribed, please feel free to hit that subscribe button. I'll be back with a brand new video on Wednesday. Peace out.